All right, so joining us with more insight is Bloomberg Intelligence U.S. media analyst Geeta Ranganathan. Geeta, thank you so much for joining us. We were just talking about Disney as the sort of microcosm for the whole economy. All these good things long-term, building up its IP, building up millions of hooked viewers who are at home watching Disney+. Well, as long as those trends continue, will investors just sort of close their eyes and sort of ignore all the pain in parks and studio and all that stuff?
I absolutely think they will. So obviously, as you mentioned, COVID-19 has derailed multiple segments, but it's also been quite a big positive in the sense that it's been really this accelerant for the streaming business, and really a blowout quarter. I mean, they crushed expectations, came in with over 16 million ads. That's higher than the number Netflix reported a few months ago, when they had that big Q1 number with 15.8 million. So really what this company has kind of achieved just over 1 year, it's actually exactly a year since they launched Disney+. They have 73 million subscribers at the end of the fourth quarter. That is just massive. And the real question is, are they willing to go all in? That's really what investors have been looking for, and it looks like they absolutely are.
What does all-in look like? Does all-in mean more Mulan releases, more avoiding the movie theaters and going straight to Disney+?
I think so, because they actually just announced a reorganization of all their segments just a few weeks ago. And what that basically did was it kind of took all their different content engines. So you look at the film and the TV studio, the TV networks business, and their streaming assets, and they kind of combining that. And what it's supposed to do, most likely, is really accelerate this transition from a traditional linear distribution model into streaming. And of course, more details are going to come out on a December 10th Investor Day. That's probably going to be the next big catalyst. But absolutely, that is all in. And maybe that means that they take their movies directly to streaming, bypassing the theatrical release. Maybe they take more of their marquee sports properties onto the ESPN streaming channel. So it has huge ramifications, not just for Disney, but for the whole media ecosystem, really.
Yeah, and we should point out, too, I mean, these subscriber numbers, the 73 or so million subscribers that are now on Disney+, I believe that exceeds the U.S. total for Netflix at this stage. I am curious, though, about growth, because, I mean, when we talk about Netflix all the time and their subscriber numbers, it's always like, well, how many more can they add, given how many people, how many households are already signed up? And I guess that seems to be the question I have right now for Disney+. I mean, how much growth is left in this right now?
So actually a lot of growth for Disney+, and that's just because, remember, they've only launched in a few markets. So US, of course, they have the big push. Canada, Australia, a lot of English-speaking markets in Europe, but they still have two major markets where they have to launch, being LATAM and a lot of Asia. So they have some part of Asia covered with Hotstar, but there's still a much more extensive launch that they're planning with this new Star product. And so that kind of really expands their total addressable market tremendously.
Yeah, and I just want to point out, Geeta, I mean, crossing the wire right now, Disney saying on their conference call that they are launching Tuesday in Brazil, Mexico, Chile, and Argentina, Joe.
So is this a problem for Netflix? I mean, it seems like are we in this stage where everyone can win and everyone can keep growing and everyone can keep posting numbers that shock to the upside? Although I think Netflix was a little late last time. Or are we starting to see evidence that people are picking some streaming services, cutting back others, and it's becoming a bit more zero-sum?
So I don't think it's a zero-sum game at all. But at the same time, I mean, there is going to be a shakeout. We kind of view this really now getting to be a two-horse race between Netflix and Disney. We do think that Netflix will be the core of this new streaming bundle. It's kind of going to be that anchor just because of the tremendous value proposition that it offers. But at the same time, you have Disney with their fantastic IP. They have global brands. They have brands that appeal across the globe. And so we actually think there's space for both of them to thrive and to do extremely well in this new streaming world.
Remind us, Geeta, of course, December 10th, when we get that Investor Day, what do we expect in terms of the Hulu brand, the ESPN brand, then the Disney brand, in terms of the streaming that they're offering? Are you expecting at any point this all to be bundled together? They had, of course, activist investors calling for more focus on streaming, more focus on not paying a dividend, but putting the money into the expansion there. What do you expect out of December the 10th?
Yeah, so they're already kind of offering different bundles, and that has really sparked growth in Hulu. It has sparked growth in ESPN+. The one thing that they did mention, though, is that Hulu is not a brand that's necessarily going to travel very well internationally, which is why they're rebranding their international as a Star brand, which is really a take on Hotstar, which is a huge success. They have 300 million monthly active users in India and across the Indian subcontinent. So that is kind of where the focus is going to be. And I absolutely think that they're going to do something pretty transformative in terms of all of their content engines, taking that and really taking the streaming first approach.
Yeah, streaming first approach. I have to point out there's a Mandalorian cereal out there, Geetha, that is now sold out everywhere. So that shows you the popularity of the Mandalorian and Disney Plus.